I think what the last sort of 20 years has shown is actually if you're going to run a bank, tech is an important part, but there's a whole lot more to it. If you look at banking over the last 20 years, massive change. Banks, older than you, have done a great job of dealing with that. But it does feel to me like banking is approaching its Amazon moment. It's time to look at the deep engineering because the next shift or the coming shift is going to require a modern stack front to back.
You have just heard from Nicholas Wilde, Managing Director APAC at Thought Machine. In his role, Nick works with banks and fintech firms to help them implement a built-for-purpose modern core, Vault, at the heart of their business. Vault, built by former Google engineers, helps organizations to solve some of the hardest problems in banking, discard the shackles of their legacy systems and reimagine their business for tomorrow. So let us dive right in.
Right. Good morning, Nick. How are you?
I'm very well, Norbert. How are you doing?
Very good. Thank you. Welcome to the show. It's been a while. And before we get into anything else, congratulations. You won an Oscar, or maybe not quite an Oscar, but you were among the top 10 FinTech leaders recognized at the Singapore FinTech Festival. So congratulations for that. Well done.
Thank you very much indeed. Yeah, it was a slightly surreal experience. I wasn't quite aware that the team were putting me up. I did ask a few questions and put it up. And then when you're stood there alongside and looking at all the others that got it, it's, really very flattering.
So when we take this Oscar comparison, what type of Oscar is it? Is it like the best movie overall? Is this the individual actor? How do you view this?
I think it was meant as an individual actors award, and I think it sometimes sounds a bit corny, people who step up and take the award and say, oh, this is for everybody. When you actually get one, which is the first time I've stood up and got one, you do grab it and think, my God, right, this isn't me. This is everybody in the team that we've built across Asia Pacific. This is partners. This is everybody back to the UK that built the products. Yes, privileged to be the leader of Thought Machine in Asia Pacific, but it's definitely, we've assembled an amazing bunch of people, as I say, including partners. Yeah, very gratified.
And now you've been in this space for a while. You were leading Fiserv for 10 years almost across the region as well, and clearly you're well recognized in the industry. And so a bit of a lifetime achievement but this lifetime achievement and experience comes, I think, a great view as to how the banking industry has evolved over this period, say from 2005. Maybe most of that dynamism came over the last 5 years, it feels. What's your perspective on Asia broadly, the industry that we're operating in?
Yeah, I think your comment about the last 5 years is true. Look, I think Asia is fairly reflective of what the rest of the world is seeing. There are economies and even individual banks that are moving at different speeds. I think the thing that's happened over the last 5 years, well, let's go back to the late 90s when Bill Gates said, we need banking, we don't need banks. And the expectation at those times, we're in the dot-com boom and everything was all tech. I think what the last sort of 20 years has shown is actually if you're going to run a bank, tech is an important part, but there's a whole lot more to it. I think everybody enjoys knocking the banks. If it's a slow news day, they'll find something to put on the front page about the incumbent banks. But it's a complicated thing. People talk dismissively about legacy. Legacy's done a phenomenal job of helping banking get to where it is. And if you look at, we did some work with IDC, some primary research across Asia about the age of cores in various banks. And it's 20 years and upwards. I was talking to one of the big banks in Australia the other week. They looked at their main retail core and the first lines of assembler code were written in the 60s. Right now, you could go, like, part of you says, oh my goodness, look what's happened since the 60s. The other part is whoever that coder was in the 60s, well done, man. You've been running a bank for 50, 60 years. Banks have done a phenomenal job. They've taken very old complex technology, which was cutting edge at the time, and they have grafted onto it. They've been able to add 24/7 ATMs, and then we went into internet banking, then we went into mobile banking. And they've wrapped those legacy cores, those ancient cores, in a whole bunch of super smart technology and been able to meet, customer expectations to large part. Sure, incumbents may have got out of the gate a little slower than some of the sexier fintechs, But if you look at lots of studies and awards these days, the big banks are picking up the awards. A lot of the studies that come out show that their mobile apps and internet offerings are the equal of anybody. So I think in general, banks have done a great job. I think the other thing is, if we look in the last 5 years, to your point about there seems to have been a shift in the last 5 years. I do agree. And I think what you're starting to see is a number of things. We've got activist regulators and legislators. Again, 20 years ago when Bill Gates was talking, your average legislator or regulator, to be allowed into the financial system was almost impossible. They were so concerned about systemic stability and that kind of thing. And it wasn't, maybe some of it was about protecting the banks, but I think it was really about protecting the consumer. What you are now seeing is regulators realizing that they need to let new players in without affecting the systemic stability of the country. So you've got activist legislators and regulators, which is a new pressure. I think there's generational. If you look at the wealth transfer that we're entering into, you also look at the people that are stepping up into CIO and CFO and CEO roles. Those people were almost born with a mobile in their hand. This is just the way I look at my daughter, and the way she uses technology is very different to the way we do. And it's not about the 16-year-olds anymore. It's about the fact that the 30-year-old, the 32-year-old that's coming up into the CIO, CEO role is they were born, and so they are measuring their expectations of how banking should be done, whether for themselves or their companies, against the way they interact with others. Now, whether that's Amazon or social media or other e-commerce, there are changing expectations. There is a technological shift. Technology has always moved on and moved fast, but it feels like it's accelerating. And the cloud ecosystem, so not just the cloud itself, but the cloud ecosystem and APIs and microservices and those kind of things, artificial intelligence, the digital data exhaust that we're all throwing off. We're all throwing off more digital data exhaust than we've ever had before, whether that's through social media or gaming or e-commerce and those kind of things. And machine learning and AI can start to behavioral models and risk models and credit models on non-traditional data. Now, what that means for incumbent banks is one of their moats, one of their barriers that they had against challengers was the vast amount of specific data they had around all of us as customers, so they could make smarter decisions. There's a couple of things. That alternative data now and those data models means that challengers can get to the same answers and make smart business decisions using different data. You're also seeing things like open banking or consumer data rights in Australia, which is, again, activist regulators and legislators creating a more level playing field for the challengers. And then you're looking at countries in Asia where there aren't credit bureaus, and the banks, even the incumbent banks, don't have data on an awful lot of the people that do need access to financial services. So if you take Indonesia, we're doing some work there with a fintech. 98% of their 300 million population, the adult population, is employed by SMEs. And most of those SMEs don't have access to banking because the banks don't really know about them. There's no central record. So that restricts them and also pushes them towards perhaps less reputable or less legal lenders, sort of thing. So this alternative data that's available, we're working with a fintech called Nickel, built a credit and risk model and are creating a two-sided marketplace where they're taking lots of non-traditional data. They've built an incredibly powerful credit and risk decisioning model. They invite SMEs to apply online. They then invite banks on the other side to inform on their risk appetite and then match them against each other. And they're using RM to offer some unique lending products and non-traditional products. There's just an awful lot going on. If you look at banking over the last 20 years, massive change. Banks, old and new, have done a great job of dealing with that. But it does feel to me like banking is approaching its Amazon moment. What Amazon did to and e-commerce did to the high street, what Google and Facebook did to the advertising industry and the print media industry, that's real disruption. What we've had today is evolution. Is there any reason to think that banking is going to escape that Amazon moment? I don't think so. I think there's less and less, and we're accelerating towards that. As brilliantly as banks have done and their technical teams and their business teams have done, there is now that point at which you say sitting at the heart of most banks is a 20, 30, 40, 50-year-old piece of kit that we've spent the last 20 years trying to insulate from the customer. It's time to look at the deep engineering, because the next shift or the coming shift is going to require a modern stack front to back.
Obviously, multiple factors that go into the decision. And as you're selling your advanced modern core banking platform, the easy sell, maybe for the outsider, is the neobanks, because they don't have the legacy. So you can pick a new technology. And the next question, I want to go beyond the technology as well. But as you said, these 50, 60-year-old systems, selling it into a larger bank must be so much more difficult. And clearly done legacy migrations over the years, but these are true monsters. And how do you approach this once from the sales perspective, but then also from the client perspective? Because you need to convince the organization that's actually worth doing. While for 40 years we said it's not worth doing, and we need to articulate this flipping point. And is this cost? Is this a technology risk of really having nobody who can touch the assembler code from 40 years anymore? Is it the additional functionality that you described in terms of the data exhaust, alternative data, etc.? How do you build that business case?
I would say, whilst cloud is business as usual now, right? Banks are all on board. Those decisions are made. Most regulators are comfortable with it. There's an awful lot of workload getting shifted up there. Core in the cloud, we are still in the early adopter stages. So the sales approach is very much taking the customer approach and looking for customers that are seeing a specific problem. If I walk into any CIO of a big bank, or CEO for that matter, of a big bank, and say, hey, I've got a new piece of technology, it's core, it's completely microserviced, it's totally cloud native and cloud agnostic, it can do all these wonderful engineering things, none of them would argue with me, right? They're like, yes, that's nice. But to your point, I've got 400 and something systems plugged into my legacy core, and traditionally core transformation has been inevitably, has resulted in all sorts of lawsuits and dead careers and blown budgets and things like that. Hey, we're new and we're the latest thing is not enough. So what we have been doing over the last few years to get a substantial customer base that we've already got in the few years we've been here is to go in to the business side and the technical side and look for intrapreneurial people with sufficient, if you like, seniority, that they've got a problem and they have the political muscle, the financial muscle, whatever, to be able to solve that. It's a painful enough problem. And there's a couple of use cases in the incumbents I'd offer up. One is, perhaps on the business side, is something like buy now, pay later. There is a need for a new digital offering, either because of pressure internally that's wrecking the consumer credit P&L, and their current IT architecture can't quickly and affordably respond to that, or they have a new product which their customer base is demanding and they want to get it out the door in a short period of time for an affordable price, rather than the typical sort of year to 2 years for new products with legacy. Or on the IT side, you go into a tier 1, tier 2 bank, and even some of the tier 3 banks, and people talk about the core. Very rarely is there the core. If you're a universal bank, there's usually a retail core and a business core. And then there's probably also the credit card system, which has its own core, and the mortgage system, which has its own core. But there are a whole bunch of other products scattered through the organization. If you take business banking, there can be things like bank guarantees, which is an incredibly necessary product, very powerful for the customers that use it. But it probably isn't in the main business core because it's slightly unusual and they never managed to jam it inside the big black box that is the legacy core. But that orphan core, if you like, is now reaching end of age. And we talked earlier about assembler code. The other thing the IT group has got, one bank, seriously, we talked to, they had a system where their support is a 70-year-old guy who retired 15 years ago and is increasingly of ill health, which the CIO said, I've known the guy for years, he's a friend, and I'm really concerned about him as an individual, and he should be able to enjoy his retirement. But from a cold-hearted technology executive point of view, what am I going to do? That's the guy that understands it, and I have to keep calling him back in from retirement. That's not a sustainable model. And so how do we get these sort of lots of little orphan cores, and how do we address that? So something like Thought Machine, with the ability to allow the bank to build any product it wants. So bank guarantee is an example. We went into one of the major banks in the region, had a problem with their bank guarantee platform, end of age, all that sort of thing. We rebuilt their bank guarantee product from scratch in a matter of weeks. And then when they did the test and the reconciliation, we matched cent for cent on years and years of data. So now they've got, okay, we can take this unusual aged product and move it up onto a modern cloud platform. Now, if I've got 20 other of those, all on various bits of technology, can sweep that up onto a modern core platform that allows me to manage it cost effectively and all the rest of it with my current young team rather than a 17-year-old retiree. And oh, by the way, it also then lets me innovate on those products and add additional features and stuff like that. That becomes very appealing. I definitely get to appear in front of C-suites and boards, and we talk about major transformation. And new banks like JPMC and Lloyds and Intesa, São Paulo, and Kiwi Bank down in New Zealand, who are saying we are transforming the bank. And that's great and takes an enormous amount of courage, and we're delighted, thrilled to be selected for those and be part of that project. But the vast majority of banks are saying we still need to come to terms with exactly what does this new technology mean, and how can we take this in a stepwise fashion. So let's solve some smaller problems first, and that could be, for instance, Standard Chartered Bank. The way they're experimenting is they built Mox and Trust. So for a brand new greenfield digital stack, for a brand new value proposition to the market, brand new revenue streams, all of that sort of thing, and then take those lessons and what might that mean for the main bank. Those decisions will take much longer, or like the bank I talked about, you solve a tactical problem for a business person or an IT person and then figure out what we do. But even the banks like JP Morgan and Intesa, they're not going to pick the whole bank up and drop it onto Thought Machine. Again, what the modern technology allows them to do is build the greenfield stack or a greenfield stack alongside, coexist with the incumbent stack, and then migrate on an incremental basis as makes sense. So the modern technology and the latest round of technology offers that path outside of Big Bang, which is what killed most core transformation.
Thank you. And I wanted to develop that product idea a bit further. It's like, I'm an engineer by trade, so I get excited about it. The technology, there's no doubt about it. It's a glittering new thing, and we can do many things that we couldn't do before, which is great. But then also like the consolidation that you mentioned and the matching one-to-one to the legacy. Yes, it takes my technical issues away, my legacy and the maintenance and all these risk factors, but it hasn't really changed what I'm offering to the market. The technology followed the legacy thinking around the product. So you have your current account, you got the debit card, credit cards, guarantees, the way you described it. And I think one of the earlier conversations that we had, the mind-blowing thing about Thought Machine was that you have the capability, whether banks using that currently already might be a different story, but if the capability to break down this product thinking, once you can build the product that you want outside of the current constraints or these constraints that have been built up over the years as well in people thinking. And two-part questions in a way, are people really using it already? Do they get their mind around that they actually need to apply a different thinking? And then there's obviously the market side to that as well. Can we actually explain to the bank customer that while you're used to a debit card and a credit card, what they're offering you here is something entirely different and doesn't fit into these buckets that they're used to as buying a product card category?
Yeah, the traditional way of doing things with the discrete set of products, credit cards, debit cards, all that sort of thing, has both a business legacy there that banks invented products and then pushed the products. And then a technology point of view, it was product as system. So when you wanted to offer credit cards, you built a credit card system and it contained everything for that. And then you needed to figure out how to make all those things interact. So sure, at the back end, from a technology point of view, certainly Thought Machine has solved that. A single ledger, you can stick a credit card product next to a invoice financing product, next to an e-wallet, next to a mortgage, et cetera, and you can bundle those products together in various ways. So we've solved a technology problem, but with great power comes great responsibility, right? Was it Steve Jobs who said, don't give the customer what they say they want, give them what they need? So yeah, you do have to be careful. Let's take Mox Bank as an example. They were a new digital bank in a market of only 6 million people. There were 100 odd incumbents, and there were 7 other new digital licenses. So they're entering an incredibly well-banked market. And if you just turn up with a new piece of tech, or it's slightly cheaper, that's so what. So what they did was spend an awful lot of time up front working out who they were going to serve, and then what did those people actually need, not what they say they want, what did they actually need. And the approach they took, rather than trying to come up with some wildly extreme set of product sets, was to say, let's look at it as a set of features. So the first piece that came out was a mobile app with an associated debit card, which you go, okay, lots of challenger banks have done that. The difference here was the master account was a current account. The customer themselves, through the app, could create and destroy savings sub-accounts. So now Nick Wilde opens his account, and on day one, I can start to go, oh, wow, I don't have to apply for a savings account. I can create one for my daughter's birthday. I can create one for a longer term, maybe annual family holiday, those kind of things. So I start to create the account of Nick rather than, oh, I must go and fill in a bunch of forms and open a bunch of savings accounts. And then as they did future releases, they added other features. One day, their customers open and it says, hey, Nick, you've been pre-approved for a credit card. So again, that's been done before. You say, yes, I like that. Thanks very much. The credit card becomes part of that account. It's not a separate thing. There's the master account, and hanging off it now are savings accounts, debit card, credit card. And I can use the app to direct, as I use the card, I can direct where those transactions go. The other thing they did, which I think was super, super cool, was they'd sent out the plastic debit card. When the person said on the app, yes, I want to accept it, that piece of plastic became a hybrid debit credit card. So no new pieces of plastic, you've got a hybrid debit credit card. And they gradually added more features. They added buy now, pay later on. Whatever you bought through that account, you could now take advantage of buy now, pay later. And again, they were adding these features in sprints that were measured in weeks, not in years. So they are assembling a set of functions. So if you now look at the Mox account, it's a single account that people are using in all sorts of different ways. But if you went down the road to another bank and said, I want this functionality, they'd say, here's 5 application forms for 5 different products. So it's about fitting banking into what customers need. And I think that's the way we go back to this generational shift. That's what customers are expecting. I expect banking to be there when I need. So buy now, pay later. There's been all this noise about it in the market. There were $29 billion paid for Afterpay, and then there's been this massive crash, and was it ever sustainable, those kind of things. The interesting part of the story for me is I think it illustrates the coming model of banking, in that it's banking as an afterthought, right? I didn't have to apply for it. I went and bought something, and then I needed money, and I just went, oh, yes, I'll take that. And I think that as people talk about embedded banking, and they can get all very kind of academic about it, I said, buy now, pay later was embedded banking in the extreme. It was banking as an afterthought. It's there when I need it. If I didn't need it, I ignore it. If I did, I don't have to do some long, complex transaction. It's just there. And I don't really care who I buy it from. It was just there. It's the right price for me. It's what I need to do it. Let's not get too carried away. The point of this new technology in the short term is to assemble products out of that the customers will understand. You could absolutely buy, there's lots of examples of technology building stuff that's just find too complicated. Yeah, let's pay attention to the customer and then use the technology to enable. Don't build something that no customer is going to understand.
I think what I'm hearing also comes back to that the core ultimately is one part of the whole stack, right? And so you can build an incredibly complex core and incredibly complex products within that core, and then using a clever user experience in the mobile app to actually abstract from that again and make this very fluid and acceptable. And I would say embedded, and you say banking as an afterthought.
Banks for the last 20 years, if you look at the engagement layer and the customer experience, they've spent an enormous amount of effort and done some really clever things, and that's fine. The problem that a lot of banks are facing now is, again, if you look at some of the studies that are out there was one that came out on for the US a couple of weeks ago, and they looked at all of the leading mobile banking apps, and they said 90 to 95% the same. They offer the same products, they offer the same features. How do we create the experience that goes the next step? So how do we really create this banking as an afterthought, embedded finance? How do we do what Mox has done, which is rather than offer a suite of products and say to people, you figure out how to fit that into your life, it's like, how do we fit into your life, and how do we be there when you need us? So how do we organization down beyond the engagement layer and down into the product layer? So yeah, we are, if you like, I think the core and the universal product engine, the ledger, sit in a foundational layer. I think there's a data and insights layer. You see an awful lot of techs and even banks doing incredibly clever things with data to create insights. There's a guy in Australia I've known for many years, Colin, with his company, is bringing gamification to the customer experience. So how do we help people be smarter about their money? How do I do as a manager of my own money? Probably a C-. I'm either so busy earning it or whatever, and it's not where my interest is. So I'm probably not a great steward of my money. I've got to say, most banks aren't either. They take a product view of, oh, Nick, you should take this term deposit or this or that, the other, but nobody's helping me be a better steward of my money. So it's that kind of thing as well that I think needs to be taken down into the bank's capability and help us that way. Data foundational layer, data layer, there's the customer engagement layer, which I think the banks have been brilliant at. And then I think there's this abstraction and integration layer, which then takes us into the whole sort of ecosystem argument, and that banks by themselves are probably no longer enough. Banking is less and less a destination. We go back to banking as an afterthought. So therefore, banking needs to be where people need it. And that's out into the increasing number of platforms and that sort of thing. And then the challenge for the banks is the platform owns the customer, and I'm providing a service to that platform. How do I not be the utility? How do I have the utility of platforms, but I don't become the utility? Because then there's, at the end of my 2 years or 3 years cycle, they just go out to market and get and push the price, push the margin down, sort of thing. It then comes back to, okay, if I'm not creating that customer engagement layer, then I need to innovate at the product. I need to personalize, hyper-personalize at the product layer. It depends how you look at it. If you're a CIO in a bank these days, either it's the most unfun period of CIO for the next 5 or 10 years, or it's the most fun, right? Most of the CIOs I meet and CIOs, they're genuinely excited and they're trying to figure out how they do launch into this sort of next generation of banking, this inflection point.
If you were the CEO rather than the CIO of a bank, or let's say a bank type provider, in the environment that we have today, would you actually go for a banking license, or would you use like the banking as a service providers to get up and running? And clearly there's the usual trade-off. Do I control what I can build? But that's the maybe second leg of what Standard Charter's been doing, right? So they've got Mox in Hong Kong, and then they've got Nexus as the banking as a service platform. Maybe a bit harder to differentiate, but if I do this on the basis of, let's say, marketing branding rather than certain products, would it be viable just to build a banking business today up to a certain point, scale profitably without ever worrying about the banking license?
Yeah, I think so. I think Nexus, I'm just super impressed with Tan and his team who built that whole thing over the last couple of years. There's for people that say, oh, it's all about fintechs and banks are boring. No, look at what this team just built inside one of the largest banks in the world and had support from the very top. I think what he and his team are building is incredibly genuinely innovative and exciting, and I think is a brilliant thing, because the other thing is that not only have they built the platform that they can offer bank as a service products, those kind of things. Standard Chartered Bank, I think, has banking licenses in 27 different countries. So now you can go to even big organizations that are multinational and say, hey, rather than having banking as a service country by country, pick out of these 27 and we can serve you from a common platform. So a genuine piece of innovation, Brent, I think. In terms of who their customer is, I think just taking a banking as a service offering and then just being a bank, I've got to believe that would be a a really tough thing to pull off, because where are you adding value? You will have the same challenge that banks have, which is customer acquisition, right? So I think you need to already be in a business where you have acquired a set of customers that are ripe for needing financial services. Let's look at Grab, right? 68, 69, probably 70 million now, is over 7 or 8 countries, providing a variety of services. And in Singapore, they've started the digital banking offering, where they are providing those banking services to both their partners in terms of the restaurants, their drivers and deliverers, their team there, and also to consumers. So if you look at their customer, and I don't know these numbers, the numbers are directionally correct, but I don't know Grab's numbers, and neither should I. But I've seen various studies that say, for a platform that's already got those customers, to acquire them financial services is $1.50 to $2. If you go to an incumbent bank and say, how much to get a brand new customer, pry them away from their existing bank, and I'd say $150 to $200. I mean, that's the price disparate. But if you were just a brand new player using somebody else's banking service, where are you going to acquire customers from? And if you've got to pay $150 to $200 to acquire those customers, and you're paying a share back to the banking as a service provider, I'm not sure that's a business model. I think you need an existing platform. You need a set of customers that you can market to.
Got it. Yeah, maybe a similar question, but at the product level. So I think it was just a couple of weeks ago, as JP Morgan and MasterCard, big announcement around account payments. And ultimately, I think some people, including me, have been wondering for years, it's like, where's the disruption coming ultimately for cards? And cards just have such a huge moat because they get accepted everywhere. And they've got the consumer protection built in for fraud, which I think is valuable personally. But with kind of the flexibility that you build in, and what you described also in the Mox context with the different sub-accounts, and I can maybe do this as an account payment from my current account first, but then I need more money and I shift it into the credit bucket afterwards. That really gives me the flexibility also to really push hard for the card intermediation, doesn't it?
It does. I completely agree. If you are running one of the big card companies at the moment, you're also looking at what's coming down the track and realizing that you are going to have to fundamentally reinvent yourself. Let's say in 10 years' time, credit cards have gone the way of the dodo sort of thing. But the expertise that those organizations have built, and the networks they've built, and as you say, the fraud and all that sort of thing, and the relationships and the ecosystem they built, okay, it might be a different looking product, but there's no reason they shouldn't still be in business. All of us use credit cards because that's what's universally available. But increasingly, I very rarely get a piece of plastic out of my pocket now. And therefore, if the credit card went away, if that card picture went away and it was just account to account or something like that, I'd still be waving my phone at the PayWave thing and not really caring. I don't care about credit cards. I don't care about most products. I care about the utility they give me. As long as I get the functionality I want, then that's fine by me. And I think what we're seeing is a disruption wave, genuine disruption wave coming, that's saying things that used to be 10, 20 years ago, you couldn't imagine doing it any other way than credit cards. Now, you certainly.
And so maybe a last question is where the next wave of innovation is coming from, or maybe it has already happened in a certain way. And when I look at Thought Machine, you obviously have brilliant founders who came out of the Google ecosystem. So it's like the rich world innovation path, right? You've got people building this like really sophisticated thing. And then maybe in the more developing world, you've got this frugal innovation where people also building really cool technology, which obviously right today is possible. Maybe 30 years ago would have been impossible or much harder. But if you look at Nubank, who built their own core rather than buying something and running at a super low cost to serve for each account. And I think it's Pismo is Brazilian as well, right? So there are interesting things coming out of these markets. And is that something that's on your radar screen as potential competition, or you're just luckily, let's say, a few years ahead and got you in the region to really push the envelope, who knows that ecosystem very well and has access to these organizations to push it, which distribution, having that product is one thing, obviously, everything else, but distribution is obviously then a big question as well. So is that a threat? Where are you worried when you look at the overall ecosystem?
Yeah, so look, without doubt, there's somebody in a garage somewhere, as there always has been. We're a 4th gen core, somebody's figuring out what a 5th gen core is, and we're under innovation pressure as much as anybody else. We've got to make sure that we don't decide that we found the answer and settle back and just become a distribution arm sort of thing. And the good thing is our founder, Paul Taylor, is an engineer and an entrepreneur down to his toenails. And I can tell you, the innovation pressure internally does not let up. I've never had a conversation with him where he's worrying about what the other guys are doing, but what he is this constant for what we could be, and talking to customers and prospects and all that sort of thing at what we could be. So I feel like we've got a phenomenal leadership team around innovation. I think we are ahead of the pack in all sorts of ways. We are genuinely from the ground up cloud native, cloud agnostic. There are lots of people saying they're cloud native with lift and shift and all those sorts of things. It's a big complex market, and there is still places for the incumbents. I think in 10 years' time, the balance will look different because the limitations will start to show. I'm sure there'll be some other competitors in there. But yeah, I think there is an element of luck in the story, right? And Paul would tell you himself, right? When he came out of Google, what the problem he was going to solve was artificial intelligence and for banking. And he kept bumping up against the big black box that wouldn't let him have the data. And being an engineer, he found it's an interesting engineering problem. So he said, all right, we'll solve core banking. And I got spoken to some of the people from the early years, and especially a couple of the really early founders, who said that people just thought he was mad. In 2014, to imagine core banking in the cloud was utterly bizarre. It's then taken him 5 years, him and the team, 5 years to get the first release. And at that time, we caught the front of the way where suddenly core banking in the cloud makes sense. Any successful company and any truly successful person I've met, yeah, there's a lot of hard work, there's a lot of bravery, there's a lot of courage, there's a lot of belief and drive and all that sort of thing. And then there is a little bit of luck, right? The other thing is we're also entering a phase where in this digital disruption, there is a first mover advantage. And it's our job as the commercial arm of Paul's team to make sure that we exploit that as much as possible and serve the customer base as well as possible, that we take that first mover advantage. That also applies to our customers. If you look at Trust Bank, 300 and something thousand customers in 10 weeks. Now, a whole bunch of different reasons for that, but what they've done, the next digital bank that launches, that's a tough act to follow. And by the way, Trust are continuing to add functionality and capability and ecosystem and those kind of things. Mox in Hong Kong, hugely successful. So I think we're under the same pressure as our customers, right? Which is, as you say, you got to stay on the leading edge, but avoid the bleeding edge, but not settle back in your chair and say, that's great, we'll just keep taking the annual subscription fees thing.
Thank you very much, Nick. That was fantastic. And I think when we started off, you were saying things like it's still early, right? And also, if you look at the balances that are held with the neobanks, often this is still like secondary balances, not necessarily primary. And the percentage that they hold is still relatively low. But it feels like we're looking at the typical S curve, and the question is, when do we actually get to that steep slope? And we're getting closer.
I think I genuinely think we are. And that's why I say I think banking hasn't had its Kodak moment or Amazon moment, whatever you want to call it. Yeah, but I do think it's coming now. You know, I obviously have a dog in that race sort of thing, so I'm going to be somewhat biased, but it's not, it's not, I have the job, therefore I have the opinion. It's, I have the opinion, which is why I took the job. And I genuinely think that what we can do is help banks large and small get themselves in shape for when the knee arrives. But yeah, it's fascinating. The other phrase I have is, if you don't think you're ready for change, do remember that it will never move as slowly as it is today. And I think that is the case. That is what we're seeing.
That is a brilliant closing comment. So thank you very much, Nick. Great conversation. Really appreciate it.
Thanks, Noah. Great to talk again. Thanks. Bye-bye.